Hi, I'd like to welcome everyone to our webinar today. My name is Suhaila Lasky, and I'm a Financial Grants Analyst with the Office on Violence Against Women in the Grants Financial Management Division. I've been a Financial Grants Analyst for the past 6 years, 5 of which have been with OVW. At this time, I'd like to note that this presentation has been modified from our previous webinar to account for the updates made in the new uniform guidance. And that applies to OVW awards made in 2015 and on. For 2014 awards and prior, please visit our previous webinar, which is available on our website. Today's presentation of the Grants Financial Management Division will cover many topics relative to our grantees' financial management of OVW grants, to include a description of the services provided by Gmfd, a brief overview of the new guidance called the Uniform Administrative Requirements, Cost Principles, and Audit Requirements, a discussion on the cost principles and allocation of costs, an overview of conference cost and reporting requirements, making changes and adjustments to your award and budget, reporting requirements, how to receive reimbursement for expenditures, expectations for financial management systems, expectations for audits and financial monitoring, requirements for closing out your award, record retention requirements, and an overview of additional resources that are available to our grantees. The Grants Financial Management Division provides many services to OVW award recipients. Our analysts receive and review award acceptances. We also review and approve grant budgets. Some of the grant adjustment notices come through our office for review and approval, like budget modification GANs, requests to extend the period of performance, and many others. And if a grant recipient meets the threshold for the A133 or single audit requirement, at the grantee's request, we provide information needed to process that audit, which is generally known as an audit confirmation. Then on a quarterly basis, Gmfd performs excess cash reviews, where we review grantee expenditures reported against reimbursements received to determine if there is any excess of cash drawn down, and we work with grantees to resolve this. And additionally, throughout the life of the grant, Gmfd provides technical assistance and training to grantees, most notably through our help desk, which is provided by both email and phone. And lastly, Gmfd reviews and processes grant closeouts. We encourage grantees to contact our help desk for financial-related questions during business hours by phone or email, and which are provided here for your reference. Also provided here is an email address and fax number for sending your award acceptance for OVW grants. And lastly, when you're in GMS and have any technical assistance issues other than needing to reset your password, please contact our OVW GMS Technical Assistance Help Desk. So we do not currently offer in-person training for financial management, but we do recommend our grantees access our online financial management training course. It was developed using the in-person training presentation, so all the same topics are covered. The course is free, and there's no limitation on registrants for each grantee. You'll need your vendor and award number to register, and your progress will be saved for 1 year, at which time registration for that user expires. The course will take about 14 to 16 hours to complete, and it consists of 24 modules which cover various topics of the grant lifecycle. The final exam is optional. It consists of multiple choice and true-false questions. It requires a score of 70% or better to pass, and is required to receive certificate of completion. Some grantees have a special condition which requires completion of the online training, or they've received a recommendation from their program manager or auditor to complete the training. In these cases, please make sure to save your certificate of completion to verify compliance with the special condition for the requester. Hopefully everyone is familiar with the new guidance called the Uniform Administrative Requirements, Cost Principles, and Audit Requirements. You may be confused because this guidance goes by a lot of different names. Some of those names include the Omni Circular, Super Circular, 2 CFR Part 200, but they all refer to the same guidance. The purpose for creating the new guidance, it was an effort by OMB. They wanted to reform and strengthen federal grant management by creating resources to achieve evidence-based outcomes. They wanted better target financial risks and ease some of the administrative burden on the recipients and the federal government as well. And at the same time, reduce the risk of waste, fraud, and abuse. In the past, you might remember there are various circulars for different types of organizations, and so this new guidance, it consolidates all of them into one document. So it consolidates and supersedes the administrative requirements from A102 and A110, the cost principles from A87, 122, and 21, the audit requirements from A133, the catalog of federal domestic assistance in A89, and the audit follow-up in A50. The new guidance applies to new awards issued on or after December 26, 2014. So for OVW awards, that means if your award starts with the year 2015 or later, the new guidance will apply to that award. Since this does not apply retroactively, OVW awards starting with 2014 and prior will continue to use the previous circulars. There is one exception I want to note, and that's for the audit requirements. These requirements will apply to audits of fiscal years which begin on or after December 26, 2014. And we'll go through a couple more examples later on in the presentation. So the guidance is broken down by subparts and followed at the end with appendices. So first part is Subpart A, and it is for the definitions and acronyms. And you might notice some changes with the guidance. What they did with the definitions portion is that they harmonized definitions and various terminologies that were used from all the previous circulars. Next, we have the general provisions section in Subpart B. And we highlighted some examples of the topics included in this section. They include the applicability of the guidance, effective dates, conflicts of interest, and mandatory disclosures. Following this is the pre-award requirements section in Subpart C. So this part of the guidance details the requirements and instructions for application announcements and other pre-award related requirements. Some examples of topics from this section include a requirement for all federal agencies to post notices for funding opportunities to one centralized location, which is currently grants.gov, and also to include a description of the merit review process used to review applications. Also included in the section is the requirement for a pre-award risk assessment review that needs to be performed by the awarding agencies, so both the federal government and if the direct recipient subawards, they need to perform this as well. And guidelines for additional special conditions to be added based on that risk assessment. So the last part of the section advises that non-federal entities are subject to suspension and debarment regulation, and as we all know, that restricts awards, subawards, and contracts with parties that are debarred or suspended from participating in federal assistance program. One thing I'd like to note here is that many of these requirements, they've already been implemented by OVW, so you won't necessarily see many changes with this. And lastly is the post-award requirements found in Subpart D. This section details the recipient standards that must be maintained for financial management, property procurement, and performance of the federal award. Also in this section, you can find guidance for subrecipient monitoring and management, record retention, and closeout requirements. So moving on in the guidance, the next section is cost principles of Subpart E, which establishes the principles for determining the reimbursable costs for work performed by recipients. Also included in this section of cost principle are the basic guidelines and factors for determining whether costs are allowable, reasonable, and allocable, how to determine the total composition of award costs, and guidelines on identifying direct versus indirect costs. And lastly, what may likely be familiar from the previous circulars is a list of selected items of cost, and those are used to establish the allowability of certain items of cost. This part lists out many types of costs and details the circumstances in which each cost may or may not be allowable. You won't find every single cost listed in this section, but it provides a good outline for many types of costs. So the last subpart of the guidance is the audit requirements section in Subpart F. A change you will notice here is the threshold for the single audit. It was increased from $500,000 to $750,000 in federal funds expended during the recipient's fiscal year. So the date to which this new threshold applies is for fiscal years beginning on or after December 26, 2014. So for example, if your latest fiscal year began October 1st, 2014, then you would apply the A133 audit requirements to that fiscal year. However, for the fiscal year beginning October 1st, 2015, you would apply the new audit requirements in Subpart F of the uniform guidance. So let's move on and talk a bit about the cost principles, again found in Subpart E. So as previously mentioned, the cost principles establish the principles and standards for direct recipients and subaward recipients to determine costs under grant and agreements. When we approach every cost, we consider various factors. So we'll think about whether or not it's allowable, reasonable, necessary, and allocable to the project. For example, if the grant objective is solely to provide training for law enforcement, it may not be considered necessary to fund legal services under the grant. Additionally, costs should be claimed against only one award. They should be permissible under state and federal laws and regulations, and the cost should be treated consistently. For example, travel costs should follow the recipient's travel policies, whether or not the activity is funded by the grant. For many of our grantees, a single OVW award is not the only source of funding. Because of this, it's important to note that any cost that is allocated to an award or cost objective that follow these principles may not be shifted to other federal awards to overcome funding deficiencies, nor to avoid restrictions imposed by law or by the terms of the award. For example, if an award program does not allow costs for outreach, this cost cannot be shifted to another federal award to overcome this restriction. Let's take a look at the classification of costs. So they can be classified as either direct or indirect. Direct costs are costs that can be identified with a particular project or activity, or those costs that can be directly assigned to activities easily and with a high degree of accuracy. For example, if your grant project includes outreach and you print 100 brochures to distribute to the community, this can be charged directly. On the other hand, indirect costs are incurred for a common or joint purpose which benefits more than one activity and cannot be readily assignable to one specific project or activity. For example, indirect costs may include, but not limited to, depreciation, costs of operating and maintaining facilities, general administration, and a few others. Moving on, here you can see the federal cost categories. I'm sure you recognize these from your budget, the one that was submitted with your application. And so each cost is allocated into one of these major cost categories, and we'll go through each one individually over the next few slides. First, we have the personnel category, and this includes the compensation paid to staff of the recipient organization working directly on the project. So in order to receive reimbursement for these costs, staff must maintain documentation of their time and effort spent on different activities, and the amount charged must match documentation demonstrating actual time and activity and not based on the budgeted amounts. If during the course of the award you realize that the actual amount of time that a staff member listed in this category is largely inconsistent with the amount of time that was budgeted, just contact your program manager or Gfmd and we'll discuss options for making changes to the budget. And as an additional note, any instance of charging overtime requires authorization in advance through written approval, so please be sure to contact your program manager for approval prior to incurring overtime. Award recipients should have a system of strong internal controls to ensure time and effort is properly documented for organization staff and should provide assurance that the charges are accurate, allowable, and properly allocated. The documentation should reflect the actual effort of the employee, account for the total activity of the employee, and follow the written policies and procedures of the recipient organization. Additionally, the documentation should support the distribution of the salary and wages among all the different activities and final cost objectives, regardless if they are federally or non-federally funded. Continuing through the cost categories, next we have fringe benefits, and these are associated with the staff listed in the personnel section. These costs should be made in accordance with the recipient organization's policies, and they should be consistent for federal and non-federal funded positions. For example, any cost of living increase or merit increase, they should be based on an organizational policy and applicable across the organization, not just for positions funded with federal grant dollars. So the portion of fringe should also be equal to the portion of time allocated by the staff member in the personnel category. For example, if a full-time staff member charges 50% of their time on the grant, then their fringe benefits should likewise reflect that 50% of the fringe cost. The travel category reflects travel costs incurred by the recipient organization staff. Travel costs should be charged in accordance with the organization's travel policy. However, if one does not exist, the recipient must abide by GSA's federal travel regulations. So as previously described, the travel category is for the recipient staff travel. So travel costs for consultants, staff of partner organizations, or travel assistance for attendees or client and survivor assistance, they should be included in their appropriate cost categories. For example, travel for consultants and partners should be categorized in the consultants and contracts category, and travel assistance for attendees or victim services are generally categorized in the other category. However it's categorized, it should be consistent with the recipient's internal financial systems. So now on to equipment. So equipment is generally considered non-expendable tangible property with a useful life of more than 1 year and a fair market value of $5,000 or more, but recipients should use their own capitalization policy if it's lower. This category should not include rented or leased equipment. Those items are included in the contracts category. Procurement policies for equipment items should be consistent for both federal and non-federal funded purchases. And a physical inventory should be performed every 2 years, and grantees must ensure that proper management, use, and disposal procedures are followed for equipment procured under DOJ grants. Please refer to the DOJ Financial Guide for more detail on this topic. Supplies like general office supplies, copy paper, training materials, postage, etc., those are included in this category. They're expendable or consumable materials used during the project period. When budgeting for supplies, you may use estimates, but when charging for reimbursement, actual direct amounts must be used and not budgeted figures. There is one change to note here with the new guide. It clarifies that computing devices can be classified as supplies if the cost is less than $5,000, or if your organization's capitalization threshold is lower, then you go by the lower amount. And this is regardless of the useful life of the item. So if the computing device meets these criteria, you can categorize it as a supply and not an equipment item. So the consultants and contracts category is used to categorize costs for obtaining goods and services. Here, you'll list out your vendor contracts, consultant costs, partner costs, etc. On the next few slides, we'll go over how to make the determination between a contract and a subaward and what characteristics follow each type of grant. For consultants, the rates that are determined must be reasonable for their services and based on fair market value. Any rate in excess of $650 per day for an 8-hour day or $81.25 an hour must obtain prior approval before entering into any contract. I want to note here that there is a very common misconception about this figure. The rate of $650 per day or $81.25 per hour, That's a threshold. So once you exceed that threshold, prior approval is required. This is not a general consultant rate, and it should not be used to charge for all consultants. Each consultant rate should be reviewed and determined on a case-by-case basis. Procurement should be conducted in a manner that encourages free and open competition, and any sole source procurement in excess of $150,000, it requires prior approval via GAN and GMS. So one notable change to the new guide is that the list of characteristics that determine whether the relationship of the agreement is that of a subrecipient or contractor is included in the main section. So I just want to note it was previously included in the A133 audit requirements portion, but now it's incorporated into the post-award requirements section of Subpart D. So it's very important to make the distinction between a subrecipient and a contractor at the time the agreement's created. Over the next few slides, I'll provide additional guidance on the characteristics that help determine the type of relationship that exists and the requirements that are associated with each type. It's also important to note that the substance of the relationship is more important than the form of the agreement and should be determined on a case-by-case basis. The guidance, it makes it very clear that it's not what you call the agreement. You can call everything a contract, but it needs to make sure that you're following whether or not it's a subaward or an actual contract. So we'll go over the next few slides what each one requires. And also to note, an organization, it can be a contractor in one instance and then a subrecipient in another. So here we have subrecipient characteristics. Okay, so for subrecipients, they may use federal funds to carry out a program for public purpose, and that's as opposed to providing goods or services for the benefit of the pass-through entity. The performance is measured against award objectives. They adhere to applicable federal program requirements. They may be able to determine who's eligible to receive what federal funding, and they have a responsibility for programmatic decision making. So please note that not all of these characteristics may be present in all cases, and that judgment should be used when classifying each agreement as a subaward or contract. So on the other hand, now we have a contract, and contracts are used to obtain goods and services. Contractors normally operate in a competitive environment. They provide goods and services within normal business operations to many different purchasers, and the goods and services are ancillary to the operation of the federal program. The purpose of contracting with them is to obtain goods and services, and they are not subject to compliance requirements of the federal program as a result of the agreement. So once the appropriate determination has been made, this slide outlines the requirements that apply to either a subrecipient or a contractor relationship. For example, a subrecipient would only be reimbursed for actual costs incurred as a result of the project and not a fee for service. On the other hand, a contractor can earn their normal profit for providing the goods and services. Additionally, for a subaward, the direct recipient needs to follow the FAFSA reporting requirements when making a subaward of $25,000 or more, whereas a direct recipient does not have this requirement for a contract. Please make sure you reference this section of the guidance and comply with the requirements for each type of agreement. So the guidance puts additional emphasis on subrecipient monitoring and management. The recipients have similar requirements to assess subrecipient potential risk, monitor activities and reporting, and when necessary, they may take enforcement action for subrecipient noncompliance. If you become a pass-through entity making a subaward, you must pay close attention to sections 200.330 and 331. So moving on to the other costs category, these costs are generally used to categorize direct costs that do not fall under the categories previously discussed. Some examples of costs generally allocated in the other cost category are rent, registration fees, survivor assistance, participant support costs, etc. For shared costs that are charged directly using an allocation method that equitably distributes the cost among the funding sources that receive a direct benefit of the item, it's important to include in the budget the method used to allocate the shared cost. For example, rent is shared by all staff who work in the office, so in order to determine the share of rent for this grant, start by determining the space for the staff listed in personnel, then multiply against that the cost per square foot, the duration of the grant, and the portion of that staff's time to compute that staff's portion of rent to include in the budget. The same process is repeated for all staff listed in personnel. It is important to note that rent and/or mortgage, it cannot be charged for property owned by the grantee or under a less than arm's length agreement. However, what can be charged is a proportionate amount of the cost of ownership, like insurance, maintenance, depreciation, utilities, etc. So as previously described, indirect costs are costs that cannot be readily identifiable to a specific cost objective. Some examples include operating and maintaining facilities, general administrative, and others. In order to include costs in this category, grantees must have a current federally approved indirect cost rate agreement, or they can elect to use the 10% de minimis rate. If a nonprofit organization does not currently have an indirect cost rate, but they would like to negotiate one, you should submit your proposal for an indirect cost rate to your cognizant agency immediately after receiving notification of your award, and no later than 3 months after the effective date of the award. If OVW is your cognizant agency and you have any questions about negotiating a rate, please contact our help desk at your convenience for more information. For organizations that currently have established indirect cost rates, they must submit a new indirect cost proposal to your cognizant agency within 6 months after the close of each fiscal year. So there's a couple changes with the new guidance, and that is the requirement for all federal awarding agencies to accept negotiated rates, and that goes for the non-federal awarding agencies as well. Also, recipients with negotiated rates can request an extension of up to 4 years from their cognizant agency. After that extension period is over, the recipient will renegotiate the rate and they can request an extension again. Another change with the new guidance is the addition of the de minimis rate. The use of this rate is an option for recipients and subrecipients that have never negotiated a federally approved indirect cost rate agreement. The de minimis rate is applied by charging 10% of modified total direct costs, which we also refer to as MTDC. So modified total direct costs include direct salaries and wages, applicable fringe benefits, materials and supplies, services, travel, and subawards up to the first $25,000 of each, regardless of the period of performance. MTDC excludes equipment, capital expenditures, participant support costs, and the portion of each subawards in excess of $25,000. You can find the full definition in Part 200.68. Now, the de minimis rate is charged without having to negotiate an indirect cost rate agreement. So recipients, they must charge costs consistently as indirect or direct, and the rate must be used consistently for all federal awards. This rate may be used indefinitely or until an organization chooses to negotiate a rate. Now, this option was introduced as an effort to ease the administrative burden for small organizations that have never negotiated an indirect cost rate, so they may recover some of the overhead costs that they incur. So while this may save you some administrative burden, most organizations that do negotiate a rate end up with a rate higher than 10% of total direct costs. So that's just something to keep in mind. So I'm not sure, most grantees have seen a section of their financial reports for program income, but you may not have been exactly sure what that is. So we're going to talk about that for a few minutes. Program income is earned when an activity supported by the grant generates income or is earned as a result of the award. For example, if a grantee hosts a training event that is largely funded by OVW grants and the event has a registration fee, a portion of the income generated may be considered program income and will need to be recorded as such. If you think there's some activities funded by your grant that generate income, please contact our help desk so we can discuss this further. There's many nuances to this process, so it's important to discuss this with a Gmfd financial analyst. Now there's 3 ways to apply program income. First is the addition method, and that's where the income is added to the grant funds to further the program objectives. And the second method, it uses the income to meet cost sharing or matching requirements. And then the third is the deduction method, and that's where the amount of income is reduced from the total program allowable costs. So the addition method is used if program income is included in the application budget that is reviewed and approved by our office. However, any program income that was not anticipated at the time of the award and included in the approved budget follows the deduction method, whereby it reduces the amount of the federal award. Program income funds that are earned, they take on the property and characteristics of federal funds, so they can only be used for allowable program expenses, and they must be included in the budget. Prior approval from OVW is required, and income generated must be expended prior to drawing down additional federal funds. Also, as I mentioned, there's a section in your quarterly financial reports for program income, so this must be accounted for when reporting. So in 2012, OVW began implementing requirements and guidelines for our grantees for costs associated with conferences. The intent is to minimize costs, ensure federal funds are being expended in a prudent manner, and to avoid the appearance of extravagant spending. In addition to minimizing costs of conferences, we also ask grantees to consider alternative training methods like webinars and teleconferences. And we also ask grantees to look into lower cost locations and venues to minimize travel costs and also make sure that all costs incurred for the conference are in fact necessary. The guidelines for conference costs apply to all OVW award recipients to include grants, cooperative agreements, and contracts, and all award recipients are subject to monitoring and should maintain all necessary documentation to support any conference cost or food and beverage expense. There are limitations on the actual amounts that can be incurred for conference planning costs, meeting space and AV, food and beverage, and various other items. It's imperative that all recipients visit the DOJ Financial Guide to ensure that conference costs are compliant. The recipients need to track any time and activity spent on logistical planning separate from time and activity spent on programmatic planning, as each have different limitations on costs. Logistical planning refers to non-programmatic functions such as recommending venues, advertising, setting up AV and equipment, etc. That's limited to $50 per attendee, and this total cost for the conference may not exceed $8,750. This cap includes any indirect costs that are applied to that cost. Now, programmatic planning, that may include activities such as developing conference agendas, content, and written materials. This function is limited to $200 per attendee, and this total cost for the conference may not exceed $35,000. This cap includes any indirect costs that are applied to that cost as well. So there's limitations on space and AV equipment, and that's $25 per day per attendee, and that may not exceed a total of $20,000 for the conference for this cost. OVW funding should not be used to purchase food or beverage for any meeting, conference, training, or any other event, as staff on travel status receive per diem reimbursement for meals and incidental expenses. Now, there are some rare exceptions that may apply, such as if the location of the event is not in close proximity to food establishments, If not serving food will significantly lengthen the day or necessitate extending the meeting, if a special presentation at a conference requires a plenary address where there is no other time for food to be obtained, or other extenuating circumstances which necessitate the provision of food. Please note that this guideline does not apply to victim or survivor service costs, which do allow the purchase of food and beverage, provided the cost per person is reasonable. This cost should be included in the grantee's budget and reviewed prior to the budget's approval. So if meals are approved, the cost cannot exceed 150% of the GSA meals and incidental expenses rate for that locality per attendee. Even though this is the threshold, we ask grantees to aim at keeping costs as close to the per diem amounts as possible. The costs would include the individual meal, taxes, and service costs. And in this scenario, attendees would need to make sure they deduct the provided meal from their claimed M&IE since food is provided. It's important to note here that OVW funds cannot be used to provide refreshments without specific prior approval. And lastly, like with all other costs, maintain supporting documentation for food and beverage costs, especially documentation that supports the justification for providing food and beverage. So some other items to note are the basic supplies that are necessary for use during the conference, such as pens, paper, name tags, etc., and those can be purchased. However, OVW funds cannot be used to purchase trinkets, such as hats, mugs, portfolios, t-shirts, nor to support entertainment activities like amusement, diversion, social activities, etc. Please note, this does not apply to outreach costs. Outreach material costs should be reasonable and are reviewed in the grantee's budget. Only recipients of cooperative agreements are required to receive prior approval by submitting the conference request and report form before entering into any contract, and also required to submit a conference report after the event. Grant recipients, on the other hand, still need to follow all of the requirements and guidelines for all conferences, but they do not need to submit a conference request and report form for approval through their program manager. All conference costs for grant recipients, they're reviewed during the budget review process. So now, recipients of the cooperative agreements, they must follow the process for submitting their request for approval by completing the DOJ-sponsored conference request and report form to their program specialist by email 120 days in advance of the anticipated event, and they may not enter into a contract until approval is received from OVW. Within 30 days after the event, the DOJ-sponsored conference request and report form, it must be completed and submitted to the program specialist and the reference email address for conferences that meet the $20,000 threshold. Please note that the same form is used for both the prior approval request portion as is the reporting section at the end of the actual conference. So a grant adjustment, as we like to acronym everything, we call that a GAN in OVW. It's the process used to make official changes to the awards. Some of these changes include modifications to a budget, changes with the authorized representative or key staff, change in the scope of the award, and change in the grant period, like an extension request. GANs are also used to receive official approval from your program manager, called a Program Office Approval GAN, and they're also used to remove special conditions on the award, some of which hold funds. Budget modification GANs, these are the ones we see most often come through our office, and they're used to reallocate funds amongst budget categories. It's important to note that this GAN requires extensive review since the revised budget, this new one is going to supersede and replace the originally approved budget. So grantees are only required to submit a budget modification GAN for the following 3 changes. First, when changing the scope of the project, when it also causes changes with the award budget. Next, when the change moves costs to a budget category that was approved with a $0 balance. So let's say you're moving $1,000 into the supplies category, and supplies originally in your approved budget had $0. That would necessitate a budget modification GAN. And when the proposed cumulative change is more than 10% of the award amount. So please note, this does not apply to awards less than $150,000. When the budget modification GAN is approved, the 10% threshold for movement of funds between approved categories, it resets. So you'll need to continue to keep track of the changes after that reset, so you're starting at 0 at that point. OVW has 2 main reports, the Progress or Performance Report, which are reviewed by your program manager, and the Federal Financial Report, which is also known as the SF425, and that's used to outline the expenditures incurred by grantees. The report allows grantees to demonstrate the actual expenditures and unliquidated obligations incurred for a specified period of time. Now, a common misconception about this report is that it reflects the drawdowns of funds received from OVW, when in fact that's not true. This report should be based on grantees' internal accounting records and reflect the amount of funds that you've expended on your side, not drawn down. We have that information in our system in our internal accounting records. So now the SF425, it's completed through GMS by the financial point of contact who's designated in the system, and it's due within 30 days after the end of the reporting period. Here we have a chart of the reporting period and the due dates for your reference. It's important to note that the due date is not always the last day of the month. Rather, it's a 30-day count after the end of the reporting period. The same goes for the due date for the final report, which is 90 days after the end of the award period. So, payments. Payment requests are made for allowable and authorized costs and should be based on immediate need, such as a reimbursement. Requesting funds on a reimbursement basis minimizes the amount of time between receipt and disbursement of grant funds. However, in the event that an advance is needed, the time between receipt and disbursement of grant funds should not exceed 10 days. There are various periods that grantees should be familiar with. The first we have listed here is the obligation period, and that's the period of time when federal funding is available for obligation by the grantee. All costs for which the grantee requests reimbursements must be obligated within this period, not before or after unless you receive prior approval for pre-award costs. Also, all services must be performed during the grant period. The liquidation period is the 90-day window that follows the end of the grant award that allows grantees additional time to request funds for obligations that were incurred during the award period. So there are 2 systems used by our grantees for the management of their grants. First, we have GMS, and that's a main administrative system, and that's used to submit and view reports amongst a bunch of other activities that you can perform in GMS. However, the grant payment request system, which we call GPERS, is used solely for payment-related activities for your grants. The following website should be used to access GPERS, and a user guide is available if you have any questions about the system. Now, in order to have access to grant funds for drawdown, the award must be accepted. You must be current on all federal financial and progress reports, and you must have sufficient funds available for drawdown. In GPERS, you can see if there's any holds in your award funds. Sometimes holds are placed on special conditions of your award, and you can view them in your award document in the subsequent pages following the actual award. The approved payments requested are deposited into the grantee's account within 3 to 5 business days of the request. However, it's important to note that GPERS does not process payment requests during the last 4 business days of the month. You can submit the request at any time, but it'll just wait in a queue until the first business day of the following month, so make sure you plan your drawdowns accordingly. One of the requirements previously discussed was that grantees must have adequate financial management systems in place that demonstrate strong internal controls. This means that the grantee must be able to provide accurate, current, and complete disclosure of the financial activities of each program or project. Each award must be accounted for and tracked separately. You're not required to maintain a separate checking account for each of the funding sources you receive, but you do need to have a system in place that tracks and accounts for each one separately. Grantees' financial systems should be able to demonstrate and track all grant obligations, expenditures, and receipt of grant funds. So now your financial management system should provide effective control over and accountability for grant funds and other assets. Controls should be in place to make sure that grant funds are used for their intended purpose, and written policies and procedures should be in place that document the processing of these transactions. All source documentation that supports costs charged to the grant should be tracked and maintained on file. Some examples of source documentation include timesheets, purchase orders, invoices, travel authorizations, receipts, etc. You do not need to submit that supporting documentation whenever you request a reimbursement for the grant, or you don't even need to submit it when you report your quarterly financial reports, but you do need to keep it on file and track it in your office. So recipients may have experience with any of these audits or monitoring visits to include an OIG audit, single audit in accordance with Subpart F of the Uniform Guidance or an A133, and a financial monitoring visit. Each generally perform reviews that verify the organization's expending funds in compliance with the applicable laws and regulations. Internal controls, financial systems, expenditures, those are all reviewed, tested, and analyzed, and then they determine if the expenditures are allowable, supported, and expended within the grant period. Additionally, they'll assess the organization's compliance with special conditions and program requirements. Additional reviews that are performed may include a review and assessment of the entire operation of the entity, where they'll check your written accounting and organizational policies and procedures. Auditors will also compare the approved budget between your internal accounting record of actual costs, and they'll determine if there's any excess cash on hand to see if funds need to be returned to that agency. So the closeout period is a 90-day window after the end of the award. Grantees have this period to submit their final financial report, final progress report, and other aspects of the closeout package in GMS. The final financial report is still submitted by the financial point of contact, but the rest of the closeout package is submitted by the programmatic point of contact. The closeout package will require grantees to verify that all special conditions have been satisfied, and also to reconcile the total expenditures reported on the financial report against the total payments received from OVW, and we call that the financial reconciliation. Now let's talk about that financial reconciliation a bit more. So during the financial reconciliation, if there is an amount owed in either direction, whether that's OVW owing the funds to the grantee or vice versa, the transaction to either draw down the funds or return the funds to OVW should occur during this 90-day period. The reconciliation should be based on a review of the grantee's internal account records. I want to make this distinction as a reminder that all reports and reconciliations should be performed using your internal records, such as a general ledger. So when performing the reconciliation, if you find that the expenditures exceed the drawdowns, you should submit a payment request in Gpers before the end of the 90-day liquidation period. If this does not occur within the 90-day window, then OVW will have to process a manual payment for the award, and that can result in significant delays in processing the payment and closeout. Now, if on the other hand, the amount of payments received exceeds the total expenditures, then you can contact our help desk for information on returning these excess funds. So records must be retained for a period of 3 years from the date of submission of the final financial report. One caveat is for recipients with an open audit who must retain their records for 3 years from the close of the audit rather than from the submission of the last final financial report. Now these records, they may include financial records, supporting documentation, and all other records pertinent and related to your award. It can either be retained by hard or electronic copy. That's up to the recipient organization to make that determination, as long as it's consistent with the internal procedures. Also, all records must be accessible and confidential records must be secured. So here's a list of additional resources for your reference. First, we have the Electronic Code of Federal Regulations link, and that's where you'll find the new uniform guidance. Then next, we have a link to our solicitation reference guide, and that provides pertinent post-award information for all OVW programs. Also provided is a link to the 2015 DOJ Financial Grants Management Guide. And then lastly, a link to our payment request system, Gpers. Oh, and actually, lastly, is a link to the Federal Audit Clearinghouse. And if you remember, this is where the database, where you can find the database that stores the submitted A-133 and single audits in one centralized location. So with that, I'd like to thank you for your time and invite you to contact the GFMD Help Desk if you have any remaining questions. Thank you very much and have a great day.